Hello, everyone. Good afternoon, good evening, and good morning. Thank you for being here. If you're an AfriDigest reader, you may already know that Africa currently receives about $100 billion annually in remittances, right? So, what you might not have thought about is that folks in the diaspora get zero credit for these payments. Unlike the payments of loans, credit cards, other recurring bills, remittances are treated differently. But what if every dollar sent to support family could help build credit stores? So that's what Adeola Adedewe is building with Credit, a platform that's pioneering an entirely new category, turning remittances into credit history. So at a high level, the company is effectively a bridge, right? A bridge between the diaspora and the African continent, between remittances and credit, and between Web 2.0 and Web 3.0 with stablecoin infrastructure that's abstracted away from the end user. So my name is Emeka. I'm the publisher of Afri Digest, and I'm here today with Adeola, right? Founder and CEO of Credit. He's a first generation Nigerian immigrant to the US, and he's founded a number of companies over the years, including an Afrobeats music label before he turned his attention to credit in 2021. So the company just announced a $22 million Series A, and today hundreds of thousands of immigrants with family across 30 plus African countries aren't just sending money, but are building credit with every dollar sent home. So thanks for being here, Adiola.
Thank you very much, Omega, for having me. Appreciate it.
Fantastic. So let's get into it and let's start with the numbers, right? So the latest public figures I have, and these are probably outdated or wrong, but I think I've seen 1 million cumulative users credit has since launch. I've seen 300 million in remittances sent from the US to Africa over the past 18 months, 2,000 businesses using the platforms, 12 million monthly API calls. I think this is from Q4 2024, and 5.4 million in annual recurring revenue. This is in the 18 months prior to Q4 2024. So just can you provide the most recent metrics, maybe around users, around TPV, around revenue if possible, just to give us a sense of the scale of the business?
Yes, perfectly right. So, as of Q4 last year, we're about the same number, but now we've crossed over 1 million customers now. And something about our platform is we understand remittance to be black tax. We just have to say. But then it's not in the prior history of remittance. It hasn't built any substantial credit history. So what we've seen is our customers aren't just a one-time customer. They're looking to get more out of our platform. So we don't see a huge drop-off on an active customer base, only when they need to send money or when they need to see a rent, an FX rate. So we're seeing them saying, hey, what else can I do on your platform? So we have 1 million active customers, not just sending money, but actively building their credit history. And
Got it. This is
we
active in a year, in a month. How do you think about
in
that?
a month. We, we,
Okay,
we, we track
fantastic.
month, and we're going to go down to weekly active customers and daily active customers over the next couple of months to see more of the value, right? So, and that's where we need to do what we call product diversification, right? A college kid is in a room of a mixed population of people. Then he sees his friends in a different demographics. Why do you have an 800 credit score? Like, why don't I have one? But then what happens is the different demographics. His dad already opened a credit card for him at when he was 1 year old, right? So when he's 18, he already has 18 years of credit history, right? But for us, that's not the case, right? So he begins to see multiple ways to actively catch up, right? For them, we are always catching up in the States and the West. So now they're asking for more products. So we need to obviously start tracking our customers base beyond monthly active users to now like weekly active users, daily active users. But right now we have 1 million active customers on actively, building credit history, sending payments. And we've crossed the B number, right? So we're now sending over $1 billion now in TPVs on our platform. And this is not AUM. I think one of the things that I've beginning to clarify is once you're beginning to get into the space of payments and begin to create more value out of like payments, they begin to categorize this under AUM, like asset under management. But right now it's just payments volume. Right today, we will get to the point where we can categorize AUM and probably start having those new metrics. But right now we've crossed the big number and we're now scaling very fast over there. So I think that's how we're growing. And we utilization of stablecoin has made it cheaper. So we obviously seen an uptick in revenue. Right, we grew 11x last year, and we're on scale to probably grow between 9 to 9x this year too as well. So we're pretty much right on our wheelhouse for revenue growth and also payment growth.
That's fantastic. So $1 billion in TPV, $1 billion in TPV, million active customers, and growing very fast, right? And I think you formally launched in 2023, right? So this has been, 2+ years, something like 30 months, right? So the question I have for you is, how big can this get, right? So how do you think about your market size? You talked about, product diversification, moving from, TPV to now AUM, which suggests, different types of offerings. So just and then you also talked about, obviously the different, Africans versus other people in terms of credit building. So are you, right now you're primarily targeting, the US market, right? US to Africa. And just so how do you think about, TAM relative to products, relative to geographies, et cetera? How big can this get?
Yeah, so raise new money to grow and expand to Canada, the UK, and also Europe, right? We understand obviously in Europe, the credit history part isn't like, as big as the US, right? But we want to serve Africans in the West. That is our global vision, right? The moment they land in JFK, Atlanta, Washington, YYZ, Heathrow, wherever it is they're landing, and we want to be able to say, we've built their credit history on day one. That's our long-term vision, right? And it's very simple. We have the capacity to replicate our technology in new markets because it's built on a core infrastructure that we've built from scratch, right? So which is why you didn't hear about us in 2023, you didn't hear about us much in 2024, because we're building underlying tech, right? We're not just integrated across multiple regions. So we have a direct bank integration to many of these regions that helps us with last mile termination. We help them with corresponding banking. So it's core tech that we've built here. Where our payment reliability is not about 98 to 99% on an average payments per day. So that being said, we started with the idea we wanted to just help African immigrants, but you know how it is. Customers are your best revelation, right? We started seeing a large pool of Black Americans using our products of recent, and now they've started seeing that credit is also a pain point for me. So we start seeing them sending money to charitable organizations, just trying to build a credit, just be part of this ecosystem. So our time has drastically increased from to north of about 60 million customers overnight. And this is one of the benefits we see about product diversification, because we had that mindset day one. While many would take 18 to 36 months to kind of tweak their products to this, we already have a game plan, right? We had this infrastructure in mind all along. And second part would be remittances once a month, twice a month at best. Let's say 3 times a month if you're a parent in the US or you have kids at home. But how about, when you tap on the train, when you line in JFK, you buy a card for $6. I don't know if when you go to JFK, there's a $6 card. Why not that builds your credit history? So that's what our stablecoin credit card, does. You've been using it in Ghana, Kenya, Rwanda all your life. We can't build that credit, obviously. But the moment you get a visa to New York, get a visa to London, you start reporting to the agencies. Immediately, day one, you started getting accessibility. So that is also part of the product diversification as well. And the second part is, you don't have to go on a long queue to JPs or all the sort of banks that might turn down and reject you. You get, an account number, a US account, FDIC insured, to top US bank without having an EIN or social security, right? So that's another thing we're beginning to because it's a stablecoin infrastructure is backed by the US dollars. And also another part is we have over 1,200 direct integrations to lenders in the United States. And this is how it works. We tell our lenders that, hey, we have a pool of users you're not aware of, because they come from Nigeria and they buy things cash, and they come here and they do not want to use credit. So we have to make credit appealing to them. And the beautiful thing about the banks and the lenders here is we tell them that, hey, they have under 33% debt to income ratio. And that's where the banks are like, wow, I need these customers. I want to offer them the loans at the best rates. So that it's already in our pipeline. We have that already, a seamless flow in our process where, once they build their credit, they ask the next question. Adi, credit, what can you do for me? We tell them we can offer you a mortgage at the best interest rate under 3%. We can offer you best interest rate on your loans. We can offer you credit cards and American Express, at a really great interest, and they're happy and they begin to tap into this product. So that's the whole idea of what our product diversification looks like, and beyond that, how our time begins to drastically increase. We're not just focused on the $100+ trillion remittance space. We're not really doing core sum on credit building and credit infrastructure and financial services for diasporans in the West.
That's fantastic. Something you mentioned, kind of triggered this. You talked about day one, right? So I'm sure there's been multiple day ones, but I want to go back to, to that kind of first iteration of the business at the beginning, right? So as I understand it, not as I understand it, AfriDigest first covered credit, when you got into Techstars Detroit in 2023, right? And it was described then as a digital lending platform that provides free credit scores to consumers and businesses, right? So credit 1.0, right? That day one seemed to be about two things: helping Nigerians build credit scores and access loans, and providing B2B credit infrastructure for lenders, right? So please just tell me about the company's origins and early years. When exactly and why did you decide to start credit, and just what was the original vision?
Yeah, so when I moved to the States, right, I got declined 17 times by a prominent bank, right? And that had me thinking, right? I lived my primitive years in Africa, and I'm credit invincible to US, right? So that was the origination, right? And I moved back after many years, over a decade in the US, and I moved back and I felt like an outsider in my home country, right? And then I said, you know what, how about we can build credit for Africans locally, and then when they migrate, right, they convert. What we realized that was going to be a lot of work, right? We realized that the banks are not ready to innovate from that aspect, not because of two things. You have one social security in the US, but in Nigeria, for example, you have two social security numbers, which is your BVN and NI. So that data misplacement honestly creates a loophole for people not to pay back and things like that. So, and I said, how do you become credit worthy or credit conscious if there are not protections enough to help guide your credit data? So it was a lot of things that we thought about. But guess what? All of our integrations were very important at the time because we could speak from a credit perspective and convert to payments. Right? We can meet with the credit division and the bank saying, hey, we need to be integrated to your payment division. So they were all part of our history on how we were able to tell them, like, hey, how about we help Africans in the diaspora, you're able to migrate, build credit history, because there are enough regulations around that. We know the blueprints already. And in this case, we then terminate via remittances because it's something that, my thesis was around how the likes of Esusu, right, build credit via rent, was built, right? If you can build credit via a secured credit line, not an unsecured credit line like the American Express, why can't you build credit via rent, build credit via transfers or payments? And that was how we made the early switch. And it's been amazing for us because many of the time spent on our initial journey was around integration, right? Or was around infrastructure. So we've always thought of ourselves as an infrastructure company, right? So even when many remittance companies are just plug and plays, we've built core infrastructure as the baseline of our product. So that is how we kind of thought about it. And then we just saw early traction early on, and we just kind of went in heads down to be like, this is where we begin to see early traction. But beyond that, we've seen more positive impact within a very short period of time. So that's why we just doubled down on and we started building from that.
Sorry, just to clarify, I caught the first part, but I don't think I caught the second part, right? In terms of this kind of pivot? This was my next question anyway, so you preempted me, right? But it sounds like, in terms of the two social security numbers, BVN and, the NIN in Nigeria, there were some challenges kind of building up the business locally. So, it was natural to kind of look, so that was kind of a push to look for other solutions, right? But now I'm curious as to
Yes.
what is, within that universe of potential solutions, how did you kind of narrow? You talked about Esusu, you talked about the idea of, turning remittances into payments, but how did you narrow it down that, okay, this is a good fit in terms of that universe of opportunities from where credit started from?
Yes, it's simple. Mind you, now I live in the States. So the whole idea has always been for African diasporans, right? Or for like Africans in the West. So I thought about how about if we help them from their home country so that when they get to the West, they are credit worthy, right? So we realized that, why not we start helping them from day one when they get to the West, right? Rather than having to deal with the long, queue, building a lot of infrastructure, data warehouse centers. It was very deep for us because we're currently integrated to the bureaus across multiple countries and banks and things like that, right? So we thought about it. It's going to take a longer time for us to get to that perspective. Why not if our long-term goal is for them in the diaspora whenever they need to migrate, why don't we start from day one there? And that's kind of how we made that pivot decision, right? Look around products, if you can build credit via secured credit lines, like the credit via rent, Esusu, which is a product we're going to launch very soon in the next couple of quarters, why not you be credit via transfer? And then we thought about the mechanism, right? We went through to literally studied the credit agencies' data in the United States, Equifax, TransUnion, and Experian, and said, hey, the biggest way you can actually build a credit is not actually when you receive a credit line. It's about on-time payments, and that's how we worked on that, history to be an on-time payment credit history, which is about 35% of your credit data today, and build it up from there. So that's kind of the idea around how we made that pivot decision to move from on the continent to the diasporans now.
So you talked about having early traction, right? Once you made the switch. So just when did you, I'm sure at the time that early traction seemed significant, right? The question is, when did you feel like you actually first found product market fit? When did you say, actually, this thing is exploding?
I'll tell you honestly, and the beautiful thing about Partechs and Africinvest, I know we talked about that early on, is they've seen a lot of these companies, right? They've interacted with, they are two of the largest, venture funds in Africa, in the continent, and also, the Africinvest is the largest exited fund in the continent. I don't even know about them. So when we were going through the conversations, we spent a lot of time with them. Even before we signed dotted lines, we spent a lot of time with them, and it was intentional on both ends, right? We wanted to spend time with them; they wanted to spend time with us. So you just naturally just kind of coerced. And many of the things that they had said to me initially was on how we received quick traction, but the biggest fine print to me was not even about product market fit. I still used to call it proof of concept, even when we crossed 5 million, right? I just realized that it hasn't shaped to the point where it's autonomous, right? New customer comes in, sends money, build credit. What next, right? So we hadn't figured out what next, was, right? So it was at that point I figured out the full cycle, like the Amazon flywheel, right? I'm sure you've seen that before. The Amazon flywheel is once we figured out the credit flywheel, right? You come in, send money, build credit, get access to capital, open an account, start accessing loans, becoming more financially inclusive. That was when I felt like I've hit product market fit, not on revenue or not on numbers, because I think we would keep chasing numbers and keep chasing margins for the rest of our lives. But the underlining is, if I can determine how fast a customer comes on our platform and builds financial inclusion, that is product market fit for me. And that's what we're even fine-tuning and shaping even till today, right? Is to ensure that we can actually build a long-term PMF for our customers and our products. So that's when I actually felt, huge relief when I got to that what next period after you beat your credit. And it was honestly me this year. And it was honestly around spending time with Partech, spending time in the Freak, and then we just talking around it over and over and over and over again. And then, I started seeing more light bulb moments, and I said, hey, this is it. I think we have something here.
Got it. Yeah, I have a question on Partech and Africinvest later on in the conversation, but that's fascinating, right? So it's still kind of proof of concept, a $1 billion TPV proof of concept. That's interesting. So I'm curious. Just you kind of talked a bit about this, but I guess first of all, just how does credit make money today?
Yeah, we make money via multiple ways, and that's the beautiful nature about product diversification, right? One thing that people don't realize is we have the capacity to move money in real time. We've 100% eliminated float management today, and that is at scale the burden of many remittance companies. Once you start moving $1 billion a month, you start having a cash flow issue, right? Because you need to ensure that your money's in the right places for payment reliability and all this great stuff. And because we thought about infrastructure layer from day one, we've started building infrastructure on this payment aspect. So that nature helps us to be very price sensitive and very fair. So we charge FX on the margin, which is still very relatively cheap. And keeps us really, on the top, earning FX margin, around remittance companies, or even banks, if people still use banks, or like local, stores, MoneyGram or Western Union today, to charge a dollar per remittance. And this depends on your volume. Like if your volume is more, we can waive that in things like that. We can move things around. But also what we started doing is adding new layers of products. We get interchange from our card issuance for new user card spend, and around the saving use products, right? So once you get to the US, you don't necessarily start getting a queue in a bank. I remember, if you go on Bank of America today, you just got into US from Ghana. You go to Bank of America today and you try to apply for a bank account, they will tell you to come to a physical store, right? And then you just want to make money when you get to the West, right? So what we do is give them access to bank account and then help them to start generating interest up to 4. It can be up to 10% depending on, obviously, if you're really high impact customer. And then we earn yield on that interest account. So many of the things we do right now is obviously under the stablecoin infrastructure that we've been able to build, and also core Web2 infrastructure. So we're connected to banks in the US, a couple bank sponsors in the US that helps us to move money in real time. We offset our payments to our platforms, and then they can also see that float management not necessarily needed anymore, and then they can terminate for our customers. So that's how we make money. We make money because we've built real-time payments, and on that we've now added more product diversification to say, hey, now this is what our customer needs next once they start building their credit history.
Got it. That's fantastic. So this next set of questions is kind of me trying to understand, the moats in the business here, right? So you mentioned this, and you used Esusu as an example of, on-time payments being, I think you said 35% of credit, right? So just how does credit actually re-engineer, money transfers to be reported to credit agencies as on-time payments, right? Is this a hard thing to do, or is this not where the real secret sauce is of the business?
It's extremely hard, right? Because we're talking about U.S. agencies, it takes months and months and months and months. So the perfect thing about us, while we were doing the African local integration and stuff, we're already speaking with the U.S. agencies at the same time. And they in as much as they, Africa was faster, but they were very slow. But we got to a point after a couple months, we had that direct integration to report payments in real time, to say, hey, the multiple payments you're making. So to give you the context, you're an elite customer with American Express or Chase Sapphire credit card. They necessarily do not report your payments on time. There is no law that tells them to report every single month. Max they report every quarter. So that means your credit score is not really affected by these payments. And that is honestly the main, the largest, right, impact to your credit history. So one of the things we realized was that if we can actually report monthly, make it very consistent, that actually increases the credit scores for our histories for our customers. So that's what we did. So the mode is around not just the legacy system that we've integrated into to make it very simple, but it's also that we've niched a path for people to build credit history via these payments. So it's a two-way path system. Where we've been able to integrate directly into legacy system. It takes months and sometimes years to integrate with, and then we find a new channel and path to say, let's start growing to making these payments through these agencies. And lastly, banks need to be in the picture, right? It takes you on average about 18 to 24 months to integrate with just one bank. We have 5 now, so we're very heavily infrastructure on this part. So anyone that probably wants to replicate would be behind at least 36 months.
So, speaking of that, in terms of taking time, and that creating a bit of defensibility. Tell me about your regulatory journey, right? If I understand correctly, it consumed a lot of time and the capital to kind of be compliant, right? And this seems like it could be, a pretty interesting barrier to entry here.
Yeah. So we have a license in the US across 50 states that obviously creates a lot of compliance heavy lifting from our banking partners or regulations. So that's the first one, right? So we're heavily compliant in US and Canada as well. And that compliance gives us a good approach to say, hey, this is what our flow funds look like, this is how we move money, and then they can actually understand the entire compliance packet. So we already have a compliance packet that is heavily regularized from like US agencies, the Fed now, Fed wires, things like that. So that's how they're able to open up their tech to us. Once you don't have that, it's very hard for them to do that. So the compliance landscape is beyond partnership. It's now saying, hey, at what level, from a state by state level, do you want to really build partnerships with these regulatory bodies? And that's where we've taken it to the next step, saying, hey, how do we get now state by state MTLs to build state relationship? What state community banks can we integrate with? If a Nigerian goes to Arkansas or Louisiana or Kentucky, how can we build credit at the state level and give them financial service at the state, even if they're not in New York or Atlanta or Texas, like the bigger states, right? So that is the next step for us, is to even go further within our compliance journey to even build more a compliance package and framework for our customers.
Got it. Do you think, or what if stablecoin regulations change, right? I guess more broadly, do any regulatory changes keep you up at night?
Yeah, I mean, thankful to the Genius Act, right? Before we started, we were more like Web 2, and we saw the benefits of stablecoins to making payments cheaper. And we had the use case, we had the distribution, right? I'm sure stablecoin everyone knows, and whenever I speak to people, I always talk about distribution as the benefits from a local channel payout on stablecoin, and we had that. So we were able to plug and play, our stablecoin and our distribution as well. But thanks to the Genius Act, it's made regulation very clear, and I don't think this is where it will end, right? There will be more regulations that even further governs. So we don't have a repeat of an FTX issue again, right? As you know, in 2021, and people taking advantage of the system. I think that's what we're obviously expecting. We know it probably won't take time. Started with MICA in Europe, and now US obviously going ahead with more of these acts and more of these Genius Acts and trying to build things around even much more better.
Got it. So I guess, how does it actually work, right? So there was the Stable Africa Summit last week, where you were the keynote, and one of the things you mentioned was, you gave the example of someone sending $100, to Africa, right? That costing, traditional means costing anywhere from $8 to $15, right? With stable coins, costs about 50 cents. You said. So just walk me through your stablecoin orchestration infrastructure. How does it work? And how do you, abstract that complexity away from the end users?
Yeah, so I have a saying around the trust and brand loyalty of US dollars. It's for many years, right? I don't naturally think a USDT, USDC overnight would be able to take away from that brand loyalty and trust, right? And that's where we value how we build our business. We ensure that we can keep the brand loyalty and trust of the US dollars on the application, so that way when someone sends money, they're not necessarily confused and then they drop off within the chain, right? And that's one of the first things we did first. We thought about abstraction across all the platform and making stablecoin just an infrastructure layer through which money moves on the background. So that's one step. The second step would be around how do we orchestrate payments in real time as fast as possible, to ensure that it can get into our bank partners. And what people don't tell you, and I've been a little bit quiet around bank integrations and on the continent. For example, 2 months ago we traveled to 30 African countries, and each African country we went with to meet some of our banking partners. And one of the things we said was, we know stablecoin, we know banks can touch stablecoin on the continent, right? Just a very few, let's say in South Africa, for example. And how have we worked thus far to ensure that we've been able to compliantly move money across is we know that they all have a corresponding bank, JP Morgan CD. And how can we help them finance that bank in real time to ensure termination? And that's the extent to which on and off ramp would occur. And they were very happy, right? So the orchestration layer still revolves around licensed areas, and areas with less regulatory components needs to be embedded in fiat. It's as simple as that. But the ability for the banks to receive their money in real time is all they need to help you terminate, and that's what we've built with them. So that nuance is how we are able to reduce costs from $8 to $15 for a traditional payment to a couple cents, because orchestration layer in the States, US dollars to stables, is cheaper for us because we have a bank sponsor. We move money on RTP, which is a couple cents. Via FedWire or FedNow, it's a couple cents for us to move that payment across. Once they receive the payments, they open up their termination books for us to terminate locally. So that helps us really, really reduce the cost for them to touch their dollars. And obviously they need to touch dollars, right? So for example, I spoke with a customer today that wants to move money from Kenya to China. He still has to touch dollars, right? So if I can ensure that he gets dollars in real time, his cost reduces from everywhere, right? So imagine for us, if we can help our banks get dollars, it reduces the cost for them, and they can give us a better FX price. And that's how we've been able to work to ensure that the obstruction is not only for the customers, it's also for banks that do not have regulations, right? Because they need to take your file to the central bank and receive a no objection, right? So once you mention stable crypto, you don't get that no objection, right? And we know this because we're also experts for ourselves. So that has helped us obviously to create some sort of clarity and comfort level. Now this was not done overnight; it took months and years of going back and forth, and that's why we had to go again in person to many of these countries. So just show them that we just want to verify that and let you know that we are committed to being a compliant business and not trying to move money for scammers or anything like that. These are some of the things we've done.
So I guess on that point of visiting banks and having bank integrations, just can you provide some clarity? I think I've read that you guys acquired a bank in Nigeria at some point. Is that accurate? If that's true, when did you acquire it and why? Like, what is the, was this always part of the strategy? What does it enable? What does it unlock?
Yeah, I also made a statement at our MasterCard event in New York in June, right? For you to be able to partner with a bank, you have to think like a bank. It's as simple as that. And for you to think like a bank, you have to have regulatory bodies to help you make a useful case to the central bank, right? So our core idea around that was we're not looking to unbank the unbanked on the local ecosystem. We're just looking to build payments that scales, right? And we need to think like a bank. Banks are the largest holders of bank balance sheets of local currencies. So if I can think like one, then I can have a short process that makes it very, very convenient for them to go to their central banks and, hey, Kredete and Adeola have built a really compliant business, and I think we should work with them. Here are the reasons. They have their bank. They don't have any issues with their own bank, so that's why they're able to work with us, and that's how we thought about it. So our bank does all of these banking relationships across many of these jurisdictions, and it gives these banks more freedom to say, hey, we can actually work with you on certain region. Even if you hold your offshore account here, we can do all of this stuff. That is how we approached it. For you to work with a bank, you have to think like them. For you to work at the scale of a central bank, you have to think like a bank because you hold the largest bank balance sheet. So yes, we did acquire one, and this was one of the key theses. We're not trying to chase money point or OPay because we know that obviously they're clear witness there, but we want to ensure that money can actually move fluidly in and out of Africa, we just needed to think like one and obviously have the necessary access points, and that's how we built that relationship.
Got it. So in fact, I mean, that's a potential to the degree that is pivotal, that's critical, that's obviously takes some time to do, right? It's not easy to wake up one day and acquire a bank if you want to get into this business. So now I want to talk a bit more about, kind of strategy, competition, and capital, right? So in addition to kind of the cross-border payments we've been talking about, right? I guess more on the B2C side, you also have that, API-based infrastructure for payouts on the continent, right? And I think your recent press release that mentioned you guys are building the largest aggregation layer of banks and wallets, right? So just talk a bit about your strategy here. I think for a lot of people, it's easy to now say, okay, we have stablecoin infrastructure that's fast, that's cheap. There's a big opportunity for on the B2C remittance side. There's a lot of competition on this kind of Africa payout side. Why get into this business, right? So talk a bit about the strategy there on the vertical side, on the API vertical.
Yes. Yeah, so it's very easy. Many of them haven't built deep integrations, right? And because we're very much closely related to the banks on the continent, and we are one of the first that they not just integrate with, but also relate with. And that made it very obvious that a lot of the other partners are building distribution, right? And which is not bad, right? So we wanted to build true infrastructure because we've seen what the value is from our own play, right? We've seen the cost reduction, we've seen the access points, right? So to give you an example, we're speaking one of the largest banks in Ivory Coast and Senegal, and they still do not have access to a corresponding bank in the US. And via our infrastructure, they do now have access, right, to this infrastructure. Not only because we have this infrastructure ready, it's because we did it for ourselves first, and now we can see the value on for bank scale level, right? So when people talk about it being a crowded space, we really looked deep on the infrastructure layer first before we thought about distribution, adding new product diversification. We needed to see what is available, and we went as far as actually to meet people. And that's why we accepted the term sheet of Partech and Afrique, not necessarily because they give us capital, but they have a lot of insight in this industry. They've exited in this industry, they are current participant in the industry, and they were able to tell us, hey, this is the level through which you can innovate, or this is the level we can give you access via our network to innovate. And that's very important for us. We need that network and access because we can then build the actual structure here.
I'm just going to ask you to just make it a bit more plain for me and for the audience, right? You talk about a bit of this differentiation that's between kind of infrastructure and distribution, right? Just make that plainer to folks who are not in the actual industry. What's the difference? How do you think about that in layman's terms?
Yeah, so MoneyGram and Western Union have built distribution on all many decades, right? And that's why it's going to be very, very hard to chase them out of the market. You travel to the US, you can see a MoneyGram store, you can see a Western Union store. They have localization, they have agents, they've built this for many, many decades. That is distribution. Now, for them, they're now beginning to think about, hey, people are now building infrastructure at a cheaper cost and are not necessarily creating all of this brick and mortar cost to actually send payments. But then new players came into this space, not to mention names, and obviously replicated more like the MoneyGram, process, while just connecting to different partnerships to terminate payment from left and right, not actually moving money across the region. So I was in Stellar Meridian here as well, where the CEO and chairman of MoneyGram just announced that they're now integrating stablecoin from cash to stablecoin. So now they're beginning to think infrastructure, because why will the MoneyGram, a $98 billion TPV company, begin to integrate? Because they want to reduce the dependency on having flows everywhere scattered, and they have a treasury FX issue. And we've seen this from an African region, which is why we're not solving this for Latin America, solving this for Asia, we're solving this for Africans, because we know we have this access. So when we went to these rooms across 30 African countries, I did not send a head of business dev to go there, or like head of banking partnership. I went there myself. I needed to speak with the CDC of Tunisia. We spoke to some of the banks in Egypt, Nigeria, Kenya, all of these countries, and they all said, hey, we've never heard of this infrastructure before. And if you're going to build it, this is what you need. And then we give them a sample on how we've worked with a couple banks, and they begin to see the light, and like, hey, if this really works, we're totally eliminating the pressures of us depending on corresponding banks for our remittance business. So we know that it's not just available today. What you're seeing in the market is a plug-and-play solution that is embedded on the infrastructure. We want to build the movement of money in real time, and that's what we've done already for our So to make it very simple, infrastructure is the back end wall and brick walls through which you can actually see money move in real time. And distribution is the ability to have customers that actually move money on your infrastructure. So we see many remittance companies, they have distribution, they have 1 million customers, they have 1 million TPVs, they already built strong distribution and they can keep scaling it. But to what end if you don't have strong payment reliability or you don't own the tech? So also that's what we're thinking of. We've been able to create a product diversification around distribution, which is owning the customers, direct to customers, building more product for them. But now we at default, we also have this infrastructure that has helped us to be able to move very fast within a short period of time. Why not scale that distribution to help other people that have the distribution be more smarter and also earn more on their P&Ls? So that's kind of how we're seeing it, and that's how I would break it down, for people that are not in our industry to understand more.
Got it. That's fantastic, right? So as a high level, this is, you started the call with product diversification, right? But some very strong stools, right? So this kind of B2B infrastructure for banks on the continent, for example, you have your credit building, and then you have, this is the credit building with the remittance aspect, right? So 2, 3, 4-legged stool happening. But to come back to one of the main public stools that people know, turning remittances into credit. You talked about Esusu. Esusu is probably the player people know in terms of turning rent payments into kind of credit building, looking at rent payments as the credit building tool. So, Esusu coincidentally is co-founded by another, first generation Nigerian immigrant, right? But it's raised over 100 million, I think over 130 million dollars over the years, So the question, I don't know if you've got this question before, but just how do you compete, in that specific vertical when they say, actually let's do remittances, just like you're saying, actually let's do rent payments, right?
Yeah. So it's Esusu is beyond what people don't know about Esusu is they've also built a prop tech infrastructure, right? And this was one of the things I analyzed, right? Once you've built a prop tech infrastructure, like I think their competitor would be more like Built than Credit, right? I don't know if you heard of a company called Built, B-I-L-T. They just raised about $250 million a couple months ago. I think that would be more of Esusu's competitors, right? But they're doing it for more like the general American population, while Esusu is doing it for immigrants. So that would be more of Esusu's competitor because they need to build more direct integrations, more of like the landlords, and to even suffice around credit building agency around rents. It's an insanely strong product, but also very infrastructure led and driven. So once people see the app, it's not just an app layer, it's a backbone of infrastructure. I think they will double down on that the competitor Built has raised a lot more money. So I don't think they will come to us and try to get to the remittance space because then they will lose market share on the rent aspect, which I think Built is beginning to gain market share. That's how I see it, and I think I told my investor I think I have a little bit luck around predictions because I've predicted a few things over the past couple of months that didn't come.
Past predictions are no guarantee of future predictions, huh?
Yeah, I know, but I think I can get the profit title a little bit. But anyways, I think that's how I say. And for us, getting into build credit via rent isn't just they're two phases, right? And we've done obviously an analysis on the phase, right? The phase is around we have integration with the agencies. The easiest phase would be because we have bank sponsors agencies, we can open up more of the data around people paying rent on our platform and we report it as an on-time payment, right? Mm-hmm. For Esusu, they're doing a lot more like deeper work in terms of having to integrate with the PropTech for people to actually pay rent instantly, right, to their landlords or wherever it is. And because they can actually track the payments, they can actually report the time the payment was made. For us, we can only report when it's been received because we're just a payments company. Mind you, these are the difference. They're more like going into PropTech, or we're going just into purely payments, and that's how we see ourselves. We can add that product.
So just very quickly, I'm sorry to cut you off. I'm looking at the time, so I want to get to the questions I have. But just very quickly on this point. So if not Esusu, who do you see as your main competitors?
Honestly, I hate to say we have a competitor because Lenfi just launched a credit card product in UK, right? So you can obviously see competitors, every day. But there is a player in Latin America. Just keep in mind now where they're actually building. They're trying to build credit. They came into the blockchain space. Felix Pago, right? That's the name, right? So they came into this space, building credit for sending payments for Latin Americans via WhatsApp. Now they're looking to add credit building product, right? So they're just adding the credit builder products, not building credit via the payments. So that would be the closest competitor that I would see within the space. That and obviously they just raised about, I think it was about $75 million over a couple of months ago, and they obviously probably they would have this product diversification on their roadmap to build for Latin Americans, but they're not building for Africans yet. So then, but Lemfi will be like the closest because they're building for those in the UK.
That's interesting. So, I mean, to go back to the original point on the investors, right? So you just announced the 22 million raised, Series A from Africinvest and Partech, right? As mentioned, some of the premier investors, well-respected investors on the continent. You talked about why you took the term sheet, because of the deep insights and understanding they have into the space you're already in and trying to move into. So I'm curious, just from your perspective, what would you say, I understand why you took the term sheet, but, from your perspective, why did they offer the term sheet, right? What was most compelling about credit? Is it the credit building side? Is it the stablecoin orchestration? Is it the B2B infrastructure? The time to go live, the shortened time to business, et cetera? Just what do you think, based on your discussions, that was really resonated with the investors?
Yes, I think, when the team flew to meet me in New York on January 9th to 10th, I can't remember, early this year, the team at Africinvest, we realized Africa is we're more like deeply rooted on our infrastructure, because they've invested in banks. They know this stuff. They've invested in banks. They showed us in one of the largest banks on the continent. They are one of the most exited funds on the continent as well. So they wanted to understand the infrastructure, like how are you able to move money in real time? And it took months and months for them to really get it, right? And just more like we met multiple times within a short period of time. Just keep spending time to just unpack the infrastructure. And once they got it, they were like, now this is insane. If this can actually be replicated to this, and this, you become $1 billion company within a very short period of time. So that was one of the things that sold them. But what we saw with Partech was Partech has exited, we tell them it's payment 1.0, right? They exited Sendwave, and now they're betting on another, company within the remittance space. What they really bet on.
They also did TerraPay early on, no?
Yes, exactly. So they bet already within payment 1.0. So like, why are they betting on payment 2.0 like we call ourselves? Is because one of the things was they saw was the growth, which is one, but to the path to product diversification. I can remember having a call with the entire committee, and they were like, what we want you to be and what we hope you to be is, eventually a solution for Africans that gets all their financial inclusive products in one. So you need to start thinking of how to further diversify. That was what they said before they even said a term sheet. And then I picked that up because that was also my vision, right, to further diversify our product, right? So we just complemented each other even before we signed dotted lines. So that is one of the things I see that was unique for them initially when they came. The growth was obviously very impeccable to them, but then one was like, I'm betting on infrastructure, one is betting on product diversification. But now we're able to merge both together, and so that they're both seeing obviously impact on what they actually bet on, and see that it actually made sense. So that's why they offered. I believe that's why they offered. And obviously, and most importantly, the team. They met with the team, they came to the office, we had a sit down, we had strategy meeting, like a pre-board before the board even happened. They connected us with some of the largest networks even before we signed the dotted line. So it felt like we're already friends before we signed the dotted line. I think that's how we liked it to be. So I think that's why they offered, and they felt very, very much comfortable to work with us.
Got it. So just a very quick question on that point, on the product diversification point, right? So just, you have certain products today. I think, kind of cards as a service, you have the wallet, you have a banking product, I believe, a virtual banking product. Obviously, your remittances, the infrastructure we talked about, right? Going forward, you're moving into kind of the rent reporting. You're moving into, savings plan. I think this kind of USD Euro, I forget product I read about, gold-based loans, etc. So just tell me about your product strategy. Why are these specific products the essential next step now? right? Just how do you think about your rollout of these products, these new products?
So to keep CAC at a really slim number and not compete with legacy products or fintechs that have raised billions of dollars, we need to be able to acquire our customers on day one. And then when you acquire them, are they just using your product for remittance, right? Then you use your product once a month, twice or three times at best if they're a parent in the United States or wherever it is. So we thought about how can we get them to use our product more than just three times a month. Was providing the financial suite, like a new bank solution for them. So when they come into JFK, Atlanta, Washington, wherever it is they land, Heathrow, they should not think about my weekly activity when I land in US or UK is to begin to go to a bank queue, right? Because Bank of America, JP Morgan wouldn't really open an account for them. It's like I already have access to this app in my home country about coming into this country. I can be able to apply for a bank account, start receiving my pay, right? I can tap as an American, right? As everyone taps to pay. I can do all of this stuff that, an American that has lived here for 20, 30, 40, all of his life or her life, I can get that benefit on day one. So that's how we thought about it. Then once they begin to become more familiar with the product, they begin to say, okay, now I'm a TA student in a school, or I earn some job where I can cash my check and deposit the payment in. I want to start saving. Then they can start earning active interest that those that even have a Bank of America account. Because Bank of America gives you 0.01%, we can give you up to 4%, right? Depending on obviously how much you earn, and terms and condition obviously applies. So they now have all of this, and now they're like, I did not take a single credit card, but my credit is increasing, right? So if I have a huge credit score, I can actually get a car that I like, and the payment makes sense, right? So for context, if you have a $10,000 loan for a car and you don't have a good credit score, you can get charged up to 28%. And then you're paying what you get a Toyota, you're paying what someone that got a Range Rover is getting because of you have a terrible credit score. Why not that pay within my comfortable reach? I can afford $10,000 loans, and I can actually pay back within a short period of time because I can afford it. But then if I have a large interest rate, which is more than my principal amount, it's very hard for me to pay. So these are the things that they begin to do. They stay in the country for 3 years, 5 years, and they say, no, okay, I think credit now, I want to apply for a mortgage. And then they can get that mortgage at a really low interest rate. So the whole idea for product diversification is to grow within the journey of our customers and not start spending so much money competing with systems like Varo and other like fintech within the space. We already have obviously strong balance sheets to acquire customers at a high cost. We don't have that luxury. We want to ensure that our CAC is still minimalized at the best, and then also scale our customer base and by adding more product diversification and also increasing our P&Ls.
Got it. So it sounds like kind of with an idea of keeping CAC low and also increasing that frequency, right? So a lot of things you hear in the super app landscape. But I'm curious, right? To go back to something you mentioned, which is that proof of concept, right? You're now a proof of concept that is now at the Series A stage, right? Just raised over $20 million. So what are you most afraid of now that you're an official grown-up company and scaling to millions?
I sent a message to my team on Slack the day obviously it became public, and I said to them, I always tell them, we're getting started. We're in day zero, and they know that that's my favorite, thing to say. We're day zero, and I officially changed it. I said we're day one. Day one is really tough, right? In Africa, we have -1 to 0, and from 0 to 1, then from 1 to 10. So, but in the West, you have from 0 to 1, right? So we started from -1 to 0, 0 to 1, and then they were very short that now we're at the point of scale. So my biggest, thing that keeps me up at night isn't just the ability to touch lives, right? But then it's at what extent can we keep touching lives at scale, right? How do we move from African immigrants to now Black Americans to build to different demographics? Anyone that wants to build credit history and obviously have access. So that is what really keeps me up at night. And how can we build an inclusive product at scale? We obviously have a plan, but then that's what really puts me up. Like we're now at scale. We're now a company that that was deserving of a $20 million check. So now how do we scale from that amount of ARR to about 100 million ARR to $1 billion ARR is to begin to build more inclusive product. I think that's where we are, at our point.
Got it. I'm going to try to sneak in two questions in the last 3 minutes here, right? But speaking of inclusive, right, and just unified, you have teams across the world, right? So I think Lagos, New York, Dubai, London. How do you build this kind of unified culture, right, and move fast, when you're operating across multiple continents and multiple time zones? Just any advice there? How do you think about that?
I think I'll do a disservice without mentioning my management team, my founding team, Hakim, who is our chief technology officer, Ebuka, who is our chief people officer, and most importantly, our star player, right, Faye, who stays in, she's currently based in
I used to
Jordan,
work
which is
with
very
Faye
nice.
at Uber, actually.
Yes, Uber. She mentioned, right. She said say hi to you. So she is the one who has orchestrated what we call a grand scheme operation, where not only have we had over 90% employee engagement within the company, we've only had two people leave, 2 to 3 people leave, and they only left because they're moving location, not because they don't like the company, right? So, and I, when I told the same thing to the new money guys, I said, I think that might be our biggest goal. We have people that have believed so much in the mission, and they have core thesis around the product to the point that they cannot even change their identity from their product at this point. So I think all props to Faye, publicly and obviously privately I do tell her is she's built that insane amount of culture to ensure that no matter where you are in the world, New York, we are all having the same vision. From an operation perspective and from a people perspective, and she's done an amazing job on that. I don't want to take the credit for that, so I had to give it to her.
Fantastic. No, she's in the chat telling me Perth and Lisbon as well. So hi, Faye. It's great to great to hear from you. We need to connect. But just the last question, right? So I talked about you guys being a bridge between the continent and the diaspora. Between Web 2.0, Web 3.0, between credit and remittances, right? So you guys to me are increasingly position yourself as this bridge in many ways. So just what future products are you most excited about? And what's the long-term vision? What does success look like in the next 10 years?
Let me give you an example. My first credit card was at 25% interest rate. So I didn't even know that I had to pay back. It's just so insane. I applied 17 times. Every single time I was applying for the credit card, my odds of actually getting approved was lower. So, and that was an education I really didn't know. So I think what I'm really stoked about is we think about credit on the continent. The World Bank has said credit is on the African continent is a $360 billion problem. That was what was on everyone's deck at the time, But now seeing this impact gets me extremely stoked. Like we are actually showing impact real time. So we're trying to move credit building from 60 points to about 100 points, and that's what I want. What we really want to do. So products like rent, build credit via savings, products as well, and also reporting, and then giving people access to financial services they would never had access to, right? Merging them with banks and lenders, and then being in the power of strength to dictate their interest rate is something you don't really see often from an immigrant, right? And we can think about it as something that was easily built. No, it took a while for them to get to that point, and now they're in the point of strength. So that really gets me stoked to see more immigrants, get access to capital within the continent of North America and obviously general across multiple countries, and overall become very happy to see how well they begin to utilize this credit product. I think that's the next step. Once you're credit worthy, you've accessed it. Now we begin to see them obviously, living their lives and living the American dream. It becomes very, very happy for me, right? When I see some of our customers leave that.
That's fantastic. Thank you so much for sharing a bit about, the company, the ins and outs over the last 60 minutes. I think, super interesting for me, right? This kind of 3, 4, 5-legged stool, the rapid growth, the idea of it being a proof of concept, and you guys are now doing kind of some interesting things, right, across the continent relative to, back-end infrastructure. But no, really fantastic. I mean, really fantastic story. Look forward to kind of watching you guys progress. Best of luck to you, Faye, Hakeem, Ebuka, the rest of the team, right?
Yes.
Thank you. And to the chat, to all of you guys, newbie, great to see you. Thank you all for spending some time with us. Hope this was informative. Let me know your feedback going forward. Karifu, great to see you again. And thank you all for being here. Thanks, Adeola. Thanks to Credit, and looking forward to the future.
Thank you so much. Cheers, everyone.